In this episode of The Leap, I sit down with Adam Schwab, co-founder and CEO of Luxury Escapes, one of Australia's most extraordinary startup success stories. From leaving a top-tier law firm to building a billion-dollar travel empire, Adam's journey is a masterclass in bold decisions, long-term thinking, and unwavering belief. Really excited to share this story. Adam is super down to earth and an absolute gentleman. Welcome to The Leap, a business journeys podcast where we dive deep into the journey of business owners to learn from their successes and failures. Our goal, it's a simple one, to help more businesses succeed. And we are live. Adam, welcome. How are you?
I'm good. Thanks for having me.
Mate, appreciate you coming on. I'm really excited to share your journey. You've obviously found tremendous amount of success in your career, but you're so humble and so generous with your time as well. So it's something that I really admire in you as well.
Thank you.
Mate, where I want to kick off, I think I speak to a lot of people that are looking to, go out on their own and a lot of the time it's fear, right, that holds them back from going out on their own, but it's often, parents and people in their support networks that, that hold them from going out, say, don't go out on your own. You've got a great job. You had a very successful, stint as a lawyer in a very prestigious role. Walk me through that period of time towards the end of your tenure where you started having these ideas. Like what did that look like? Because a lot of people said, I think you're crazy doing this. Like, talk to me about that time. Take me back there.
Yeah, I think saying I was successful is probably a massive overstatement. I'm sure anybody who worked with me at Freehills would dispute that. But I had a great time there. And I was only a lawyer for about 2.5 years. I was a paralegal while I was at uni before that. So I wasn't. It becomes progressive. It's like a dive. You can get like different degrees of difficulty. The older you are, I say, the more successful in your career you are, and that generally correlates to age. But if you're a 45-year-old partner at a accounting or law firm earning $2 million a year, that's a big jump to go and start your own business. That's a lot of opportunity cost. I was earning $50,000 a year, working 300 hours a month. So realistically, I was giving up not that much money and a lot of work. So even that said, and my co-founder, a guy called Jez, who I went to school with, and we had a bunch of businesses before that, or a couple of businesses before that, a bunch since, he was the one who really pushed us. He thinks differently. He's very sort of, people everybody questions this decision. They questioned it more back then because back in 2004, being an entrepreneur was just Christopher Skase and Alan Bond. Now being an entrepreneur is cool. Yeah. So it's a bit different. Yeah. So now you can leave your great corporate job and people, they might look at you a little bit strangely, but nothing like it was in 2004 when you looked like you had leprosy when you left the job. Yeah.
Did you have at that point when you actually resigned, had you started, was the ball rolling with, your first main business?
So what we did, so Jez was sort of pushing to do a business because he just thinks a bit differently and very strategically. And he was pushing us to do something. And we had no idea what we were going to do or what we wanted to do. And we started our first backpacker apartments business almost by happenstance. But we got this. So we got the idea. Jez was pushing to do a business. I actually took a leave. We did it for about 5 months while I was still at Freehills. So there was obviously zero. It was the classic side hustle. Yep. And I'm not a big side hustle fan generally, but we did a side hustle. So do as I say, not as I do, or do as I do, not whatever the opposite is. So we had this side hustle and we started the first apartment, we started a second apartment. And then after sort of 6 months of side hustling, it was minimal work. Because once you set the apartment up, you the people are in there and you kind of just.
So you were taking on the leases and then subleasing.
Exactly. So we had friends from the UK and they were staying in this hovel in St Kilda. And we thought, and they were paying $150 per person per week. We thought, this is really terrible. We can do a much better job of this. So we saw a problem. This is now when people start a business, I'm sure you see in your clients, someone sees a problem, we'll start a business, we'll solve it. This is 2004. Nobody thought this way. This is pre-Y Combinator, pre-StartMate, all this kind of stuff. It was when starting a business meant going to the bank, getting a loan and starting a corner store, whatever it was. It wasn't startup-y like 2025 culture, very different. So we saw this problem. We didn't set out to solve it. We just thought we can do this better. And we thought we can make money doing this. Why don't we try? How hard can it be? And it turned out, actually wasn't that hard. It was just, we had to learn a bunch of stuff. So I had to rent an apartment. We'd never rented an apartment in Melbourne before. I lived out of home in other countries, in US and Canada, but neither of us had lived out of home in Melbourne. So I had to furnish this apartment. That was an ordeal in itself. But the hardest part was getting tenants. So I had to fill this apartment. So once we could fill the first 2, we thought, let's give it a crack. So I went to the Freehill, my partners at Freehills, the partners at Freehills, and said, can I have a leave of absence? Which they did back then. Effectively 6 months, you can always come back if things are wrong. And it was actually pretty hard to get. They were reluctant to give it. It was such an unusual one. Usually people got a leave of absence, they maybe did us a comment at a client. It's like, fine, go off. Yep. It was pretty rare. In fact, I'm pretty sure nobody has ever before or since started a backpacker apartment business from a law firm like I did, or like Jez did for his bank. But we did it. I had a partner called Neil and another one called Rod who were very good. There was a senior partner who was unwilling to do it, and the partners I work for pushed it through, and I'm super grateful to them for doing that. And both of them are still very senior lawyers, incidentally, and done incredibly well. They were very successful back then. They're even more successful now. But I was never going to be them. I was always much more commercially inclined, much prefer the commercial stuff. Didn't know we'd ever start a business, but that was always sort of what I felt I was better at. So I would have gone into probably banking if I didn't start. We didn't start what we started, but we took this leave of absence. Probably 2 months in, we realised we just wanted to make as much or preferably more than we were earning in our really sort of low paid, hard work jobs. So there were no
ambitions at that point to be like, we're going to grow and scale this thing, and it was like, let's just replace our income.
We had no idea. If we could make more than 50 grand a year, which is what we're getting paid, we'd be happy. Yeah. We got the business to a couple of $1 million in turnover in probably 3 years. But it was always a pretty low margin business and always a high risk business because, as I said, we were
taking on the leases.
We were the principal. Yeah, so you think what we should have done is Airbnb, which is the platform. We would take on the leases, and if the apartment was empty, like a hotel owner, we weren't the Marriott, we were the owner of the hotel. So it's a really hard business to be in. It's really hard to scale it. Some people have done this business well, but it's pretty hard. And eventually, the only way we eventually became a corporate apartments business, a bit less risky and easier. But the only way we ever really made proper money in that business was when we bought half a dozen apartments using debt, and then we sold them 18 months later, I should say, because we don't like debt. And we made like $1 million. And that was, this is back in the mid 2000s. So it was really good money for us back then.
So it was like a flip essentially, like refurb. Well,
we didn't intend to flip it. We were basically positively gearing these. So positive gearing is pretty unusual. Not many people positively gear, as in make more yield than they're paying in interest. But interest is and interest rates are higher. We were paying like 7.5%, 8% back then. So it's not like the 18% of the 80s, but it was high, high enough compared to sort of today's almost free money. So we bought them. We had tenants in them. We just didn't like the debt.
So that's crazy to have a positive cash flow back then at those interest rates.
Because we were doing it ourselves, like a hotel. So we were able to do it. We weren't making massive amounts. We made a bit less money than if we'd rented it, but we're still making, because obviously rental was less than interest. But we were making enough money that we could positively gear them. We had half a dozen. We then fixed them up a little bit by dyed the carpet, painted the walls, and got a bit of a windfall profit 18 months later. Pretty lucky. And we had this $1 million seed fund ourselves that was burning a hole in our pocket. We were 28. And we just rolled the dice. We didn't want to buy a house. We didn't want to we're pretty young still. I think both single at that point or certainly weren't married at that point. And just wanted to give it a crack on something bigger, but it was just hard. That was a business that was really hard to scale. So we learned a heap. It was our 6-year apprenticeship into business, coming out of professional services into.
Because it's doing well though, right? So you've replaced your income at that point. You've achieved what you set out to achieve.
Yeah, it was doing well. Depends on your definition of well. I think our motivation was never to make 200 grand a year each. It was always to do something bigger. We never had any idea how big, we were happy to build like a $5 or $10 million business. So it's never had to be $1 billion, but we certainly wanted a business that was easy to scale. And that was every apartment we set up, I was putting the furniture together. Jez was getting rid of the rubbish. I was making the bed. It was full on work. It wasn't
hands on.
It was hands on. It wasn't. We had to show tenants around. It was full on. It was like a real estate agent, but less glamorous.
Yeah, and because the margins were tight, there was really no opportunity to be able to step back and get someone else.
We had we had Martine and Rosie helping us, and they were great. Martine still works with us. Rosie's retired since. But they were with us. Rosie was with us for a decade. Martine's been with us she was left for a small, tiny period during COVID, but she's now 17 years. So to have and we sort of love longevity of team, and we still obviously try and maintain that through Luxury Escapes. But it was a great apprenticeship. It was a 6-year apprenticeship for us, where we learned how to treat customers, how to create a website, how to do really sort of base level marketing, all these really sort of simple stuff that you need to know. And that was just a great apprenticeship. We can make our mistakes there. And then we made another business, made mistakes there as well. And eventually when we got to sort of I say not our final, may or may not be our final destination. When we got to Luxury Escapes, launched Luxury Escapes about 9 years, almost 10 years after our very first business. So we were by then 33. So we'd had a bunch of experience, still pretty young in the scheme of things, but had a bunch of experience running businesses that gave us a running start into Lux.
Yeah. How important, because you were very, very hands-on, how important do you think that was for, the next steps and the next ventures?
Well, I think when you're running a 4-person business, everybody's sort of hands-on. It's the nature of the business. And Jez, who's probably a bit more strategic than he's operational, he was super hands-on as well. We all were. And even if you look at Lux today, I know most founders you speak to, I'm sure, are the same. I'm still as hands-on as probably any founder you'd speak to. And that's just because you grow up with this. This is, nothing different. I wouldn't want to be different. And you build a team that operates similarly and also probably appreciates that. There's some people who just don't want a founder involved, and that's totally fine. But we've got a team that I think is a really founder-driven team and loves working with a founder. And there's different people want different things. So we're a work from office culture. The people who don't want to work for an office, the people who do will hire people who want to work for an office. So it's just there's not always a right and wrong. We think there's a right for us, but there's a right for other people. And we just want everybody to we'll build a team, and every business, especially that's still founder-led, tends to be sort of build a culture around that founder, because I'll hire people at ELT level who think similarly, and they'll hire people who think similarly. So it sort of cascades down. Eventually the founder then transitions out and things eventually change, but we want to stay a day one business as long as possible.
Yeah, I love that. Talk from a belief standpoint, right? Like, did that help your belief, like stacking those small wins? Did that help in terms of belief, or were there still moments of uncertainty? Can we do this with another business?
There's now that we still have every day there's uncertainty. I open up my daily report, which is a sort of 5,000 line report, which has sort of data on every single product we sell and conversion, or there's a bunch of stuff. And every day I'm hoping I hope it's a good day. We're still a transactional business, and the bar just keeps raising. So
it doesn't go away.
Never goes away. Maybe it will eventually. It hasn't gone for us. But we don't take much money out of the business. So we're still highly levered to the business. So as long as we live like billionaires and driving Ferraris and going on private jets, we're nothing like that. We just live my salary is one of the relatively lower ones in the business. And if we eventually sort of transact on the business, great. We've taken a bit of secondary along the way, but very small. But yeah, no, we're the ultimate paranoid entrepreneurs or paranoid optimists. So we hope for the best, but we're always fearing the worst.
Yeah.
That said, we can be really aggressive and optimistic, coming out of COVID, or even before, while COVID was up, we were super aggressive. But we absolutely are paranoid about stuff going wrong. We check everything every day. We try and operate as leanly as possible. And we're constantly, if we've had a bad day, there'll be 30 emails I sent before 6 o'clock to people saying, well, what's wrong with this? What's wrong with that? How do we fix it? Not necessarily, not criticizing people for the result, but saying, well, how do we make sure this doesn't happen again?
For sure. I was interested, 2010, because that was when the daily deal space was really competitive, right? And then you guys launched in that space that year. Walk me through that, because take me back there to be this is an opportunity, and how that all started.
Funny, this story just gets, as in, that used to be 5 years ago. Now it's 14 years ago. So it's aged us, or aged me certainly. But yeah, so we had this $1 million we talked about before. So we had the apartment business. And the apartment business we had till basically COVID, and COVID allowed us to finally shut that down. It was making money, and it was more hassle to shut it than keep it running. Eventually shut it. So that was a blessing. But we had that business for a long time. We had that business 15 years or more. But yeah, so we had this $1 million. We wanted to do something more scalable. We had an initial idea to do a sort of restaurant booking business, a bit like an open table sort of resi type business. We actually started that, eventually sold it to Menulog, or to the team, the Catch guys, who then sold to Menulog. So that was a great success, not due to us. We didn't do a good job at all in that business, but we managed to partner with people who were much smarter and much better than us. But we had this $1 million. We then pivoted to a daily deals format. We thought we can start this business, build up a database, and then go back to the restaurant.
Okay, so that was the play.
That was the play. The play didn't work, but we managed to get lucky selling the business. So that was the play. It was an ill-fated play, and we ended up so that the restaurant business was a debacle, but we just had a massive fluky result selling to really smart people who did a great job. But we had this daily deals thing. It was our second business, but we actually got really great traction really quickly. We were about the 10th to open up. We got to 82 businesses in the space. And we ended up buying a bunch of them that survived. The rest all died, and Group One sort of keeps going, run by a guy called Nathan as well, who's a good friend of ours, who we used to work with in a different business. But we sort of bought a bunch of them.
What was the attraction going into that?
We just thought we could make a bunch of money doing it. Yeah. And in fairness, we did for a brief period.
Yeah. The data behind it, because I know you're very data driven.
It wasn't really, at that time, it wasn't the Groupon play that Google, everybody thought, Google offered them like $12 billion US at one point. It was worth $26 billion at one point, and now it's worth about $500 million. So the Groupon sort of story was the rise and fall. And they've been unlucky in sort of just the whole industry really died. But we started, and we realized pretty quickly that there was some real problem with the unit economics of this business, partly because you didn't control the end-to-end experience. So when you work with a really good vendor, it's great. And now we still have an experiences business. We just pick and choose a really small number of vendors. It's a business that sort of goes along with our core business. And so if you go to London, we'll sell you a restaurant or an activity in London. It's not our main business. But it was our main business back in 2010, 11, 12. Actually, even longer. We realized pretty early that travel was a much better part of that business. It had much better unit economics, and that the lifetime value was so much higher because people were having great experiences. Go to hospitality-driven businesses. Plus, there's things like TripAdvisor. So if you do something wrong, you get pilloried. So hotels have a carrot and a stick to do the right thing.
For sure. And so you saw people were just gravitating towards those offers and those deals.
Yeah, and a much higher basket size. So $2,000 basket size. Now it's higher, but back then it was 2,000 versus 50. So it's pretty easy.
So was there like a pivotal moment there where you saw it and everyone's like, aha?
Oh, it was over a period, but we were way too slow. So we eventually did a deal with Gabby and Hezi from Catch of the Day in 2017. We probably knew that travel was the golden goose in 2011. So that's a long time. Okay. In deals time, that's like 100 years. Yeah. So, but we were focusing more and more. So we bought a bunch of other experiences businesses from other business, we bought Kudo from 9MSN. We bought Living Social from Living Social. We bought a bunch of businesses. And then we bought a bunch of product business like Brands Exclusive in the Home, which is like a Temple and Webster business. We thought we could just diversify, get scale. Travel was a great business, but we want to be a diversified e-commerce business. We were called Oz E-commerce at the time, which is a stupid name. But as it happened, it was no idea. Travel was the great business. Everything else was between okay and terrible. Yep. And we eventually sold the product business to Gabby and Hezi. We bought that travel business, and then we merged our experiences business. We then bought the experiences business, and that's fine. That makes a bit of money. But the product business was like a millstone for us. It was terrible. We just couldn't run it properly. And not because we didn't have a good team. We had a great team, which is just a really hard business. We were always pretty good at doing travel. Oh, well, I say pretty good at doing our version of travel. And we just 2017 became pure play travel, and then just continued to refine that business over the years. We did not a pivot, but we really expanded the business during COVID when everybody else was firing people.
You need to unpack this for me, because I look at that COVID period and take me back there, right? So that we get the news, people can't travel.
Yeah.
I want to be in that boardroom, in that meeting. What was that conversation?
Funny enough, I was briefly, for about a year or so, I wasn't running the business. I retired.
And they brought you back in.
And I retired at this point. So I was living I was doing a bunch of other stuff. So I was in the office every day, but Cam was running the business, doing a great job, and the team was doing a great job. We were making good profits, and all that stuff was going on. We probably had shifted a bit more to a profit mentality than the growth mentality, but that was what the shareholders were asking. So it's no sort of criticism of management at the time. And I was doing a bunch of sort of board stuff and exec chairing a business called Bookwell and doing a bunch of not-for-profit stuff. I was having a great time. The business was going well, so everything was good. And then COVID happened. So I wasn't in those exec meetings. I was certainly sort of very close to the decisions and sort of not signing off, but effectively going with them. We could tell pretty quickly, within a couple of months, you could tell we'd be fine. Because the beauty of our business was we don't sell a commoditized product. We certainly didn't back then. So our products were effectively great deals, and our customers were willing to keep their great deals either on foot or as credit with us. Okay. So we didn't have to pay out a mountain of cash like our UK contemporaries had to do, or the Flighton had to do, because they were selling commoditized products. So because of that, we were able to hold on to basically all our cash. Like some people wanted refunds because they hit hard times, and we obviously facilitated that. But for everybody else who were happy to keep their money with us, we obviously that was helpful. And then,
but there was there a number at that time where it's like, if we have to refund 30%, we're gone?
Oh, we didn't even get to the point where we calculated it. But we did have different they had the code red, code black, et cetera levels. But we never dropped, our sales never dropped to zero. They came pretty close to zero, but they're pretty quickly within a couple of months, they were back to sort of 50%. Because we could sell Australia to Australia. So remember the lockdowns were happening, they'd undo the lockdown, as ridiculous as the lockdowns were. And you could travel into states. So we'd sell a bunch of Queensland properties, or we did a bunch of US to Maldives stuff. So
did you have to move pretty quickly on those? Like,
yeah,
once
really
it was
quick.
like,
and obviously hotels were desperate to do great deals. So we had some of the best deals we've ever done in that period. So we had some amazing content for customers. They were willing, people were keen to do it. They had plenty of cash because of JobKeeper. So it was, and obviously we weren't doing it like sort of the e-commerce businesses are having sort of the Coke and guys when they hit $2.5 billion in market cap. So there's some incredible stories during that period. So we weren't like that, but we were doing enough between people not demanding refunds, so amazing customers, and people still buying to an extent. We didn't fire a single person as a result of COVID. Like there was obviously ins and outs, as there always is, but we didn't have any specific, like even the great travel business, the bookings, the Airbnbs, the flight centers, sacked sort of 10, 20, 30, 40%, 50% of staff. We increased the team size during COVID. Not drastically increased it, but increased it. And within sort of 6 months of COVID, I'd come back. And we said, look, this is wartime. I came back and just had a growth mindset. We built a marketplace, completely changed the tenor of the business, and used it. There's that classic crisis and opportunity being the same word in Chinese. I'm not sure that's actually true, but for us,
we need to Google that.
Yeah, for us it was like certainly there was a crisis, but it was really an opportunity. And look at the
opportunity. Was it like? The opportunity was it to, we've got some breathing room and time to like refine systems, processes. Okay.
We completely changed. So we were a flash sales or technical sales business pre-COVID. So we had 100 products on the site. We sold some flights and a little bit of insurance, but we generally what we call flash sales. Yep. So what we're known for is great deals to Bali, Maldives, Thailand, Vietnam, Queensland, on sale for a week or two, travel period of 18 months, great discounts, all that stuff. So customers loved it. Hotels made money from it. It was great. There was a limited TAM in that part of the business, which we were all very cognizant about. So great working capital profile. People pay us up front. But the addressable market of that business is maybe a couple of billion for us in Australia. It's not a decent size, but it's not $1 trillion like the normal, call it the whole travel sector. We want to get a piece of that trillion. Okay. We're never going to get 500 billion, but can we get a lot more than 2 billion is our ultimate question. And that essentially is a marketplace business. You look at Booking.com, even Flight Centre, certainly Booking and Expedia and Airbnb, they're marketplaces. So Booking has a million hotels and 1 million apartments, probably more now on the site. Airbnb, the same. Expedia, the same. We had 100. So if you want to go to London on Luxury Escapes, you could type in London. Actually, we didn't even have a search box, but if we had a search box, you typed in London, you maybe get one response, maybe. This is pre-2020. Yep. Now if you type in London, you'll get 70 or 80 responses. So it's not 1,000 like Booking. We don't want to be that though. We don't want to go head to head with Booking. What we do is we curate the best 4, 5, 6 star properties in the destinations our customers want to travel. We'll also sell experiences. We'll also sell flights. We'll also sell lounge access. We'll also sell villas and cruises and tours. And so we'll sell the full breadth of travel product. So we're not as deep as a Booking.com or Expedia. You
don't want to be. It's the place where you go where it's like we don't have to sift through everything.
Yeah, we want to solve the paradox of choice. Yeah. And we don't want to create a paradox of choice. Yeah. So we've done a lot of work around that. We've now we built our hotels marketplace, which turned out to be way more complex than we knew it would be hard, but we didn't realize it'd be as hard. So you've got a technical and a commercial challenge. The technical challenge is you've got to connect to these hotels. And it's not just a matter of, it's not like selling products. So when Catch of the Day became a marketplace, they connected to Miracle, and that just facilitates connections to various different suppliers. And there's basically one SKU. So to be Converse shoe, there might be 8 different sizes, but there's a handful. It's a very simple product. Travel is much more complex because you want to travel at a certain date. Each date has a different price. Each date range, so it came 2 days, is different to 5 days, is different to 10 days. If you're traveling 6 months out, there's 2 months out. Someone's got a special, then there's like all these different rate types. So there could be 10,000 SKUs per hotel. And you're operating with like 100,000 hotels. That's like trillions of SKUs versus a price. So there's this famous sort of meme about Starbucks having 180 billion options when you go to Starbucks. We'd be more than that. Yeah. So with every travel business, certainly like a Booking. So there's a lot of technical complexity in building that out. There's a lot of commercial complexity because if you want to go direct to a hotel and have what we call last room availability. So us and Booking, whoever sells that last room is the one who gets it, and the hotel doesn't want to double sell a room. So there's that. So if you want to get last room availability, there's a bunch of sort of technical builds and commercial agreements you need to enter into, which we're still working on this. So yeah, we sell, and we this is now sort of a $200 million business for us. So it's operational, all that kind of stuff, but we're still making it better. We're still doing stuff like we don't have margin bidding, for example. There's a bunch of stuff we don't have that a Booking.com have had for a decade or more. So I didn't realize the competitive advantages that Booking and Expedia have and we don't necessarily compete head to head with them. We compete sort of tangentially with them. And I didn't realize just how much of a barrier to entry they have. And we've built a bit of a barrier to entry in creating all these marketplaces. So yeah, the Flash business was a great cornered resource business. It was super, super fun. And we still have it. It's still the majority of our business. Actually not the majority of our business anymore, but it's about half our business. And all the other stuff, all the other marketplaces, flights, cruises, tours, marketplace hotels, marketplace tours, experiences, villas, all that stuff, cruises, all that stuff is like half our business now.
Yeah, interesting. One thing that and we'll come back to a few things about the business at the moment and some of the things you're working on. But I'm interested for you to walk us through. I think a lot of people will, see big business success, and they expect the owners, founders to be, living on a yacht and living this life. But they don't see the sacrifice. They don't see, and it's a little bit different in startup space, right? But a lot of our listeners, will have like service-based businesses and the sacrifice. Take us like things that you've had to sacrifice as an owner building this out, like not just from a numbers perspective, but like what things have you had to give up to get to the business where it is?
I'm trying to think how to answer this question best. We don't think I'm privileged to be able to do what we do. So be able to work at a business that sells happiness, that has 620 amazing employees around the world. I love coming into work, skipping to work, but for the broken leg, skipping to work every day.
Hop
into work every day. So I consider myself really lucky to be able to work with people I love and to work with customers who are almost, not every single one, but most of our customers just incredible. You hear on the calls, they love speaking to our team. They love Luxury Escapes. So we're super lucky. Yeah, and because you love it, like I worked 10 years without having a day off, and it's not real. I don't consider that a sacrifice. I consider that a blessing to be able to do it. Yeah. And yeah, if I was sort of digging trenches or working coal mines, it'd be very different. But yeah, because I love coming in. So it's not, I don't consider we actually have to sacrifice that much. Like both Jess and I don't spend huge, like, again, I don't want to say, like we live in relatively sort of nice houses and stuff, but we don't, other than that, that's what we consider an asset. We don't spend, we're certainly not taking private jets anywhere, super yachts, like none of that. I went on a catamaran with my family in a really small one. We sort of shared rooms and it was pretty tight. It was like a hostel on the water. But that was still like really not, really,
Did you book that through?
We don't do catamarans actually. We do for the business called Boat Around, who sort of specialise in that sort of stuff. We do ocean cruising, the big cruise lines, which we buy from us, obviously, because we've got a pretty good cruise business. I don't consider us having to sacrifice anything really.
What about like, because there's, I can't imagine, like I feel the pressure with a small team that we've got to support them and pay them. And, like I feel like it's, I can't imagine having like the responsibility of, 400 plus staff on riding on you, I guess. You may not feel this way, right? But like, are there sleepless nights?
Definitely not now. There was never really sleepless nights, but there was probably a few nervous times like 13, 14 years ago when we had maybe like 50, 60 staff. It definitely gets easier as you get bigger. Like as long as your business isn't like going bankrupt, which happens to businesses eventually. You either get bankrupt or sold. Like not many business. There aren't many 100-year businesses. We'd love to be 100-year. We want to be a 100-year business, but look at the biggest businesses in the 70s and 80s. Almost taking like in the US, maybe just Exxon, in Australia, maybe just BHP. There's very few that last even 20 years, let alone 40 or 50. Certainly at a scale. So we want to build a business that lasts a long time, but it certainly does get easier. It gets a lot more fun as well in many ways. It's certainly like at your level when you got like 10 staff, it's fun. Yeah. It's fun in a different way, but now it's fun without the worry of like the pressure's different. The pressure goes from the pressure to survive to pressure to make as much money for shareholders or stakeholders as possible. Yeah. And ultimately that's not always what you need to be doing. You need to look after employees, you look after clients, obviously customers, which is the number one priority. So it's a balancing act. Every CEO has to balance is all the different stakeholders. So shareholder returns are a big one, but you got to balance short-term shareholder returns versus long-term shareholder returns. And we like to think of ourselves as long-term greedy, not short-term greedy. So we'll sacrifice. We'll incur a cost to help a customer in the short term because we think it's the best decision in the long term. So that's how I've always sort of operated the business. And I think part of the reason why we were able to prosper through COVID is because we've always been that long-term greedy and we were able to make sacrifices. We weren't public. We didn't have to do a dilutive capital raise like Flighties and Webjet had to do. Not their fault. They happened to be public. So we were able to get away with a lot of stuff being private. That's to say we won't ever go public, but we were able to. Being private allows you a lot of stuff. So now, and we've had a big focus on profitability in the last couple of years, but we were able to get to we were able to go through 21, 22 and not be as focused on profitability as maybe the public company peers were, who really had shareholders breathing down their neck. Our shareholders came on the journey with us and have been incredible and super patient, and we have to obviously repay them. Because not just me and Jez, we end up the only shareholders. We own sort of 45% of the business combined, or just under 44%. We've got 56% of people who aren't us. And we have to make sure that they've taken a risk and backed us, and not all gave us capital, but some gave us capital and others gave us other stuff. And we have to make sure that they get a return that's commensurate with the risk and the time.
Yeah. Well, take me through your mind again, when your head hits the pillow, right? I don't know about you, but I'm always thinking about the next day, the next week, things about work, what things go through your mind?
I don't tend to think about work much.
Yeah.
I'm a pretty good sleeper generally, a bit hard with the leg, but I tend to be a pretty good sleeper and tend to be able to sort of cognitively dissociate from stuff. So I think about work during work hours and before, in the shower or whatever, but I tend not to think about work. I think there's no upside. And I tend to not be someone who worries about stuff intently. You get the inputs, we get lots and lots. Business essentially, in my view, is making lots of quick, correct, or sometimes strategic decisions, but lots of decisions. You got to get more right than wrong. And the right ones have to be the important ones. And by all means, don't get everyone right, because if you're getting every decision right, you're not making enough decisions. But we want to get a lot more right than wrong, or certainly more right than wrong, and not trying to overcomplicate it. We're just making lots and lots of decisions every day. And if we can get the basics right, we think, and if we can treat customers right and treat employees right, then that will flow to great shareholder returns and great community returns. So we just try and do the little things right and not think of, are we doing $1 billion, 1.2, whatever it is? But are we getting the right deals in front of our customers? Are we marketing the right way? Have we got the right ROAS? Have we hired the right people? If we get these decisions right, then we think good things will happen.
Yeah. What about I've noticed that, business owners, that we're always focused on, what's next, the growth. I wish we got there faster. If we did this differently, we would have been, at this point 2 years ago. Do you ever take stock, and do you think it's important to pull up sums and just look?
Probably not enough. Yeah. We do a best of campaign in January, which is always our biggest month, and that's a great way to, obviously, because we're generating great. It's our most profitable month of the year. It's a good month to reflect on how we've gone versus previous years. But ultimately, you're always running. We're always running to get bigger and get better and treat customers better and get more stuff, all that kind of stuff, and build new products and build new cool stuff. You never really have that much. You certainly, I imagine, as most founders you speak to, no one really celebrates the wins too much. But at the same
Why
time,
do you think that is though? You know what I mean? Have you ever sat down and said to yourself, wow, I've done a great job?
I think it's just partly the Australian way, is you just never think that. And also I think the day you think that, you become a day two business, kind of Jeff Bezos parlance, and you take your eye off the ball, you're less hungry. You see it with sports people, as soon as they lose that hunger, they fall away real quick. And we want to stay day one. We want to be a 100-year business. We've now really call it a 15-year business if you count the pre-Lux businesses that were similar. We're a 15-year business. That means we're 15% of the way there. We need to be super hungry, and we're competing against unbelievable people, unbelievable competitors like Booking.com, like Flighties, like Expedia, like Airbnb. If you're not on 100% and pushing and evolving and coming up with new products, you'll just get swamped.
So what do you think, you've mentioned there's only a handful of businesses that have, lasted. What do you think will stop you guys from achieving and being one of those long-standing businesses?
That's a great question. So I think the deeper question is, how do we build competitive advantage? So look at competitive or moats. So Warren Buffett talks about these business moats, and that's what allows you to make more profit than your competitors, and it's what allows you to be a generational. Look at the Hermes, 150 years old, LVMH the same or older. Look at these great businesses. They've got great powers. They built obviously incredible brand. We talk about Hamilton Helmer on my podcast a lot. He created these seven forces that we also borrowed from Acquired, which is a great podcast. And we look at the great businesses, and every business has a great brand. It's a great business. That's sort of not negotiable. And there's the 6 other powers. There's scale, network effects, cornered resource, switching costs, counter positioning, and our process power. And we look at how do we build. You're very rarely going to build every, like maybe Microsoft has every power, but most businesses have sort of brand combined with a couple others. And we look at how do we build these competitive advantages? Obviously we've worked on brand for a long time. That's not just through advertising. That's through when we look at our customer service being really good, and we over-index in customer service, and we have hundreds of people on the phone. You can call us 365 days a year, 7 days a week. Call us on Christmas night, we'll answer the phone call. Call us on New Year's Eve, we'll answer. Call us 2 a.m. tonight, we'll answer. And we look at that as a brand builder because people have a great experience. They'll tell their friends. They'll come back to us, hopefully come back to us. So brand is obviously critically important. We've got some cornered resource. The deals we get with our partners in Bali, and this is a bit of scale as well.
You always get me into hot water. These, especially the Mulia deals that keep,
which is live now. And
I know
really
it's
well.
live now.
Definitely got to get nail that one. It's a great deal.
It's my and always the Alila into the
which is live now as well. So you look at so you mentioned a couple of Bali hotels like Alila and Mulia and Kempinski and Hyatt. If you look at the sort of, if we were a country, we'd be the 8th largest country supplying Bali, and probably the 3rd or 4th for leisure travellers. Where the number
so if you were a country, as in the amount of people that you
so we send all but 7 countries. We're bigger than, as in more than. So I think bigger than us is China, Australia, Russia, New Zealand. There'll be like 7, and we're bigger than all the other countries in the world to Bali. And I think we're probably 1 in every 2 Australians who go to Bali for leisure would book through us. So if you're a hotel and not working with us, then you're probably going to struggle to make much money in Bali, realistically, if you're a hotel scale.
So you're having the opposite problem though, when so many businesses are knocking on your door now?
Well, we've got a really great team. Aaron and Troy and the team that run Bali do an incredible job of, we're able to sequence it pretty well, but we can't work with everyone. There's definitely hotels we don't work with, and they probably pay the price somewhat there, because but there's also hotels who are 3-star who don't want to, like, the quality's not right. But for the hotels that do work, we have another brand called Scoop On that works with those hotels, which is a great brand and people love it. And it's just a different product. But for the brands we work with, they give us the best deal on earth. So they'll give us a 30-40% price break, and we'll deliver them heaps and heaps of profitability. So it's a great win-win. Win-win. So our customers win, our hotel partners win, and we just sit in the middle. So
my wife wins.
Yeah, your wife wins, you win.
Wow.
You win big. But yeah, so we've got what's called a corner resource, because the deals we get, nobody else has. Yeah. And we've got scale, because we can deliver, some properties, $20 million a year in sales. That's most hotels do 50 or 60 or maybe 100. They're a big one. That's a material part of their sales. Yep. If you didn't work with us, you wouldn't be making much money. Mm-hmm. So we've got scale and we've got cornered resource there. So we've got some real powers now. But we've got to keep building more and more powers. Another power we've been working on is switching costs. So think of switching costs. So a switching cost is, a classic example of switching cost is if you've got Oracle integration or SAP. I'm sure a lot of your listeners, customers use these big, what they call ERPs. They cost like 3 or 4 or 5 or 10 million or 100 million to integrate. That's really hard to switch from. That's the ultimate in switching costs. Okay. Another example of switching costs on a small scale is Xero. Had a great profit announcement a couple of weeks ago. The reason they were able to do it is because they could put prices up 15% and nobody can be stuffed. We still use Xero. Yeah. We are switching out because we got to the point where it's too big. But I've got other businesses that use Xero because, that's what you use. The accountant knows how to use it. So that's a great example of switching cost. If you look at our business historically, very little switching cost, because you can go from Luxury Escapes to Booking.com to Qantas Hotels to your own travel agent really easily, because there's no reason you have to book. People book through us because they love it and they want to, and we have some people who book 10 times a year, but a lot of people will say, Booking.com's there, I've used it before, it's a great app, I'll just book that hotel because I know it. So we're great for certain things, but Booking.com are great for other things. But what we want is try and increase switching costs so our customers don't go other places. Mm-hmm. So
is that loyalty programs? Is that part of the play?
Exactly right. Yep. So we built our first loyalty program a year ago, almost a year ago, called Lux Plus, which is a paid subscription platform. You pay $250 a year and $500 sign-on fee, and you get incredible discounts. So you can save a couple of grand a year easily.
Better uptake than you thought. Like, how was that?
Yeah, should be hitting 50 grand pretty soon, 50,000 people pretty soon, which is exactly what we were budgeting.
Amazing.
Obviously, it's a cost, so it's a slower burn than a free loyalty, but that's done really well. And it's not a cheap cost either. You've got to sort of really bought in and get.
Did it start off as a free loyalty? Like, was there a?
No, because we built a free loyalty and launched that 3 weeks ago.
Okay.
So I can talk about that in a second. But we always wanted to build a free one. We did the paid one first because it was just easier. It was a much easier build. It was still a bit of complexity there, but it was a much easier build. We launched.
Because I thought the free, like, join a waiting list for the free one would have been how you'd normally start it.
Yeah, and that's like called the Mecca one or Qantas. Or Qantas actually has both, like us. But we always wanted to do the free one there, and we work with the loyalty guys in Sydney who are amazing loyalty consultants who've worked with every sort of loyalty plan in Australia almost. And we went through all different options. And we came up with a sort of Qantas style earn burn status loyalty. Yeah. So you think of the earn is great for behavioral economics. We're sort of pushing people across different products. So you're getting a reward, and it's not. You're not like getting 50% off, but you're getting points for every purchase, which is good. And you can double up with your credit card, which is nice. You can double dip, and you can potentially even triple dip sometimes if you're using airline loyalty as well and buying flights. So that's pretty cool to get 3x points. Also, you can burn your points. So we want to work with banks and financial institutions and any organisation that have points to be able to burn. We effectively sell our points to those organisations. They cancel the point and does the transfer. Effectively how Qantas has built such a dominant frequent flyer platform. 80% of Australians sweep their points straight to Qantas. And Qantas is an amazing business and a great product, but they can sell their seats. They don't need these frequent flyer burn anymore. So there's a real difficulty now in certainly getting business class seats. And it's not Qantas or every airline's got the same issue.
I saw a little off topic. I saw I think it was the I Fly Flat.
My friend Steve, yeah.
Okay, I think it was him that put up a post that he checked for
Qantas seats. He couldn't find one at all in London.
Crazy.
Yeah, which is in business seats. You can get economy, obviously, but and that's not Qantas Flight. Qantas is selling their seats for cash. Why would they discount at 80%? Yeah. And I don't blame them for that. So when we created our burn, we wanted to just be a bit different in that you can burn on any product. So our Maulia deals, you can burn for Maulia and get that great 40% discount. It's not like we just save it for the worst stuff that we can't sell. You can burn on every single product. In fact, your burn redemption rate is better on Maulia than it is on other products. We'll burn based on our margin. So the best thing to use your points on is our best deals, and you get this huge discount. Yeah. So, and it's always on. So we don't say, oh, you can only buy 3 and then we're cutting it out. Like, you can always use points like currency. So we want to make sure so we've sort of flipped the script a bit, whereas every other sort of, call it airline loyalty, even hotel loyalty, really sells out of rewards spots. We're the opposite. We will never sell out. There's always different options for it. So we think the burn opportunity is really good. We think we can work with lots of our partners to provide great bonus burns. So you're getting like significant discounts on top of your discount because being co-funded by our partners. And then finally, we built a status tier program, which is the real switching cost. So every time you're buying something, every time you're staying somewhere, we're giving you status credits.
Who doesn't like a good status?
A platinum one or a platinum.
Yeah.
So if you get to platinum status for luxury escapes, you're getting sort of multiple upgrades, like 4 upgrades a year. And that's guaranteed. So when you're booking your Maulia trip, you're going from one room to the next room, or you're going from half board to full board, or from an 8 massage package or to extra transfers, whatever the upgrade we've been able to build on. Every upgrade, every package is different, and not every package has them, but most actually do. So you're getting a guaranteed upgrade, which is pretty rare. You have to sort of cross your fingers, go to the airport with a neck pillow. You actually got a guaranteed upgrade. We're also giving free airport transfers to the airport. So instead of having to pay for a taxi of $100 or $150, we're giving you can get a free transfer, and you're getting lounge access as well on an X number of occasions. So I think the transfers are unlimited. So if you're platinum, every time you buy an international trip with us, you're getting that. So you're getting lots and lots of value. We're giving a heap of our margin back to our best customers, but that's on the basis that you're staying with us for all your trips. So to become platinum, you probably have to book exclusively through Luxury Escapes to spend whatever the 30 grand, 40 grand limit is. Depends on what you've bought slightly. But once you've spent that, you'll get a huge amount of value back. And we want you having these incredible trips. You're getting your upgrades, you're getting your transfers, you're getting your lounge, you're getting a bunch of other stuff as well.
Yeah. I'm just in my mind, I'm just thinking the complexities involved with doing all of that, like even offering lounge access, like the discussions around partnerships.
You got to source the partnership. And also the reason why we built this second is we work with the IBS team, which is a really great loyalty CRM. They work with Qantas and most airlines. So we had a massive build with probably like 40, 50 people working on this build. Wow. So we got 130 tech team globally, and probably almost half of them were touching this build. The team did incredibly well. Shai and Gus did an amazing job building it. Our commercial team did an amazing job building it. It was super, super. There's so many decisions you have to make as part of this, but we think we've built a really robust platform. We should We hit a couple 100,000 members signed up in the first few weeks. We think we'll get to 1 million members within 6 months.
Yeah.
Which is exciting. We're not Qantas. We haven't been around 100 years. We're not a national airline.
Yeah.
Obviously, Qantas have sort of 10 million members, but for us to get to 1 million, we think that'd be pretty incredible. And we
I think they give points away for coughing these days.
Yeah,
like I feel like it's
for doing exercise, and you get points if you do it. So we want to build partnerships like that as well that allow our ecosystem to grow, because a big part of a great loyalty. Look at the great loyalty set. Qantas is obviously a great one. Woolworths have built a great one. Bupa's got a pretty good one. It's all about how do you build networks and partnerships up? So you want to maximize the value of the network. Effectively becomes a cryptocurrency in many ways. So you want to create that network. So we're because we only just launched we're speaking to banks and financial institutions now to partner with them. But our real goal is how do we partner with as many people as possible to add as much liquidity in the program and giving our customers really, really good value.
Yeah, heaps of choice, heaps of value. Like a lot of these decisions are obviously very data driven.
Yeah.
I was interested when I saw retail. And it seems like a lot of businesses are pivoting back into retail. Help me understand it. Like when it came up, what sort of investigations and data goes into looking into it? And
the data piece is tough because it's especially when it's new. Once you've got a store, it's much easier. So we have to launch our second store, but we're about to start building our second store. But the data piece is a bit harder. It's a lot of gut feel.
Yeah, so it's like let's just
try it out. We had it pop up in 2016. It was okay. 17. It was in the city, in Melbourne City.
So did that give you enough to go?
Not really, but it told us what not to do. Okay. And then we wanted to open up in a big shopping centre. Chadston was the one we chose. Number one shopping centre in the Southern Hemisphere. Incredible destination. Only has one flight centre in there before we opened up. They were keen to get another travel in there. We wanted to create just this great showpiece. If we could break even off the store and get this great marketing carry, because we've got massive screens out the front. We've got, it's like a 400 square metre, most beautiful travel store in the world. We're pretty confident of. We knew we were able to build something really nice. So quite different to the Collins Street one, which is, the guy did an incredible job, but it was done in like 2 weeks by our PR team and marketing team. We spent much longer on it and it was a much bigger fit out.
And it doesn't have to, it's a marketing piece as well, right? So
we thought, marketing's the sort of free carry, and if we can break even, that's a win. It turns out it's actually quite profitable. Okay. So we didn't have to sort of worry too much.
Did you test through like a smaller pop-up in Chadston as well?
We didn't so much test as Chadston gave us sort of one site, and then we had to, because there was issues with the tenant. So we got one site a couple of years ago, and then we got the other site after they moved out. So we built the proper one. But so technically, if the first one had been a disaster, we could have probably got out of it, I think, but it would have been messy. But it was good. And then we've just gone and every month it's grown. And we've got a great store manager in there, Ben, and amazing team. They do events there as well, as in they'll organise. If you need to organise a wedding or a corporate event, they can do that there as well. So we do heaps of stuff out of there. We can hold events there. We do hold events there. It's a pretty big store. Yeah. It's pretty stunning to look at. Yeah. So it's been we didn't expect it to be a sort of commercial, profitable success, but as it happens, it bizarrely has been. Yeah. Partly because the team's just so good, and that gave us really, really good confidence to launch Sydney. Which hopefully is live in November.
Amazing. So that's good. So you got that test case there to be like, okay.
Yeah, and then Sydney will be another test case, and Sydney goes well, we'll do a Brisbane or a Perth or an Adelaide, and we'll also go from there.
Yeah, easy. One thing, obviously, you've mentioned it a few times as well, is around, all of these incredible people, and I love that, everyone and reference all of these people that have helped build the business into what it is today. Walk me through, from a cultural perspective, a hiring perspective, having such an alignment in people with the same philosophy, ideals. How do you go about identifying talent, building these teams out?
Yeah, we never do it perfectly. You sort of have to constantly evolve and learn. Yeah. And even now, we're probably not perfect, but we do a pretty good job. Yeah. But it comes from hiring. Get fish right from the head, right? So our executive leadership team's incredible. We've got an unbelievable HR or P&C, and we've got in-house recruiting function. We use external recruiters as well, certainly for high level hires. We've got some gun recruiters internally. We treat it I think once you get to scale, you can do it. But yeah, I think just me randomly hiring on LinkedIn and Seek, that doesn't work. We have to bring in experts like yourself and really smart people. So when I'm hiring ELT, I'll use exec search. And then SLT will tend to use our team, but our team's like we got recruiters, essentially recruiters in house, really good recruiters in house that do a good job as external recruiters. So we always use an expert. I don't trust myself to do it.
Well, it seems like with everything, you're always going to, a branding expert, a loyalty expert,
and then we get the expertise in house, and we tend to use loyalty is a rare instance of us using a consultant. Actually, we don't use many external tech-wise, we very rarely do. Yeah. We tend to build most stuff in-house. Yeah. We might outsource a little bit, but as in-source, so more in-source. So we sort of work with Simon Lee's business team of 5, and he'll help us hire people, but they're effectively hired by us, really. Yeah. Even the legal mechanism's different. So we'll do that sort of thing as well. But ultimately, if we don't have the expertise in-house, we'll go out, but then we'll try and build the expertise in-house.
Mm-hmm. Is there anything like, that's been... not a silver bullet, but one big thing in terms of the hiring policy or philosophy around how you hire that you found has worked?
I think having really good people do the hiring is probably the philosophy.
Is it a gut feel, certain testing that you do?
We do tests, certainly for developers. We do test. Where we can, we'll do testing. Knowing that testing's not perfect, and you don't be sort of misled by testing. But when there's certain things, we'll do testing. Depends on the role, obviously.
It's interesting because you can test for a lot of things. Our core is like sales. And we put through people through scenarios and how they handle certain objections and scripting and see how they go through it. And but it's the amount of businesses that don't test for things that can be tested for blows my mind.
Well, if you don't test, you got to be really quick to move people on. Otherwise, because you'll see in the wild and see the sort of success or not. But there's certain people who we probably are less likely to hire. I wouldn't say we never do, but if you've worked at a big bank for 20 years, it's probably not going to be a great cultural fit for us. You might get the odd exception, but generally speaking, if someone's been in a big company and they left it, they might say small company, big company, hated it. That is our culture. That's usually a pretty good sign. But we don't generally hire out of massive businesses, only because it's probably not going to work. You're used to having lots of support, lots of financial resources, all that kind of stuff. Whereas we tend to run really lean, really efficiently. We don't like spending lots of money. We're not flying business class, all that kind of stuff. If you want that sort of stuff, there are other places to work. Where we work from office culture. We don't work from home unless we're a pro flexibility culture. So if you need flexibility
for developers, that's
unusual. But our development, we give lunch every day, and there's a bit of carrot and stick as well. But so you think this commute time, but we'll give you lunch and save you an hour at lunch. So you sort of get a bit back. So we're giving a chef catered lunches every day in Melbourne and Sydney, and some vouchers to some other offices. But we work really hard to try and find the people that will fit in well, and we don't always get it right, but we get it more right than wrong. And we think we think it's more important to hire for culture. Obviously, you can't hire idiots, but realistically, you can teach a lot of stuff, but having the right cultural fit is much harder to teach.
Attitude, behavior, for sure.
Yeah, exactly.
When you look at where you are now, do you believe that you're here running a business of this scale, achieve this level of success? Do you think if you told yourself this 2005, would you have believed it?
Oh, 100% no. If you told me, I wouldn't have believed in 2017 or 2019 even potentially. Wow. But also, it doesn't feel, when I say it doesn't feel real, obviously it's real. You go to work and it's real, and the money's real, and the people are real. You can't not pay salaries, you can't not pay clients. So it's obviously real, but it doesn't feel that different to when we had 4 of us in that room back in Little Collins Street looking into a wall. There's more people, and we got incredible people now. Our tech team is as good as anyone in the country, I think. And it's the caliber of people we have is next level. But other than the quality of people, which has probably changed over the years, because in the early days, you kind of got to get lucky to get good people. It's sort of luck of the draw. And there's lots of people we got in the early days who are amazing, but now we can actually sort of specifically target and recruit great people.
Almost who you want.
Which was very different back then. We have incredible people apply. Our head of comms who joined recently used to run Qantas's comms. To think that we can get someone who had probably the number one comms job in the country and was probably the best at that in the country, and she wanted to work with us. It's so flattering that someone of that caliber wanted to work with us. And our flights guy is the best flights guy in the country. There's a lot of people, and I'm just naming 2, but there's 300 people I think in our business who are just elite leaders, operators, and we're super flattered. people go into job interviews thinking it's up to the person has to interview the interviewer. In my view, it's very much the opposite. We want to try and impress the person applying for or coming for the job to show that we're worthy of their talents.
So that's a different view, you know. I like that. I think that's important.
And obviously we're along the whole process we're assessing to make sure we don't hire people who are no good. But like if we think someone's a really great talent, we're selling them as much as they're selling us. So we've built this great team, and when I say it doesn't feel real, just because like we're the same guys. Like Jess and I are the same guys, and I don't think we've changed. Like Martine's been with us since the very beginning. She still sits next to me, and people still call me Schwab, and people who have worked for us for 15 years are still happy to have a crowd. Like, so I don't think we're hierarchical in a sense that somebody has to make a call, but we certainly don't have sort of ivory towers. People have lunch together and all that kind of stuff. There's no executive washroom. Like, it's not like old school business where it was different. I've always been open plan, sit amongst everyone else. I'd much rather be sitting and overhearing combos. I try and sit with customer service. I don't do it enough. I've got a desk down in the CS and phone team are on a different level in the building. I try and sit with them as much as I can just to hear combos and to be part of it. But we certainly never expected it. But even now, we don't really think about it, to be honest. We try and serve customers the best we can. We want to build a business that stands the test of time, that has got a great brand, that can survive and thrive and create great value for, think of stakeholders. We like to create enormous value. Like during COVID, obviously as much as the bad stuff happened here, like people in Bali and Fiji have great partners. There were like 80% of people were in poverty because that tourism is a huge part of their economy. Yeah. So we couldn't, as soon as the borders opened, we would just deliver a flood of customers to Bali. And we were speaking with GMs and they were in tears when they saw the customers were about to bring them. They could bring their team back in. So to be able to do that is really lucky and really special that we can make such a difference to such beautiful people, the Balinese, the Fijian people, the Thai people. They're such beautiful people who are so incredible to work with. And we've been so lucky that we're able to create real value for them.
Everyone wins. Yeah. Like you're helping them, you're helping people get a great deal. So.
Yeah, we're really lucky to be working in a business. There's so many businesses that aren't win-win businesses. I think that most of the medical industry isn't a win-win business. Like you're saving life, you're charging a fortune to do it. The legal profession, my old profession, is the ultimate win-lose business. Like, yes, you're trying to create win-wins, but most of the legal profession isn't about win-wins. A small part of it is. So many other businesses aren't creating win-wins. Yeah. We're so lucky we can
Mine's
create a win-win.
Like, we'll find the right person, but, with a small to medium or any business, do you know what I mean? When they still have to pay the invoice, they're like,
well, I think to an extent, what you guys do is a win-win because you're matching the right people with the right. When it's done right, it's a win-win. There are obviously some operators out there who maybe aren't as good as you guys, but I think if you've got a really good search business or recruitment business,
but it's like I always look at like mortgage broking or lending, right? Like the client's stoked and they haven't had to pay anything out of pocket type of thing. You know what I mean? So
because I don't know they're paying it.
Yeah. So, but like from one thing that I wanted to understand, like how, like what does success mean to you? Like how has it changed over time? Like how do you measure and define it for yourself?
I think it.
Do you like? Are you big on goals?
Stuart Butterfield from Slack had this great comment. He's a pretty philosophical guy. He grew up in a commune, I think. So before he created Flickr and Slack, and then sold it for $25 billion or something.
That's a crazy story.
Talks about how like initially you want to have enough money to be able to eat, like you have enough money to be able to rent a place, and you want to have enough money to be able to go on a good holiday, for example. So there's sort of these different stages, like when you can be comfortable, as in you don't have to worry about the cost of X. I don't have to worry about. Hopefully your listeners don't have to worry about having enough money to afford food. That's really bad. And there are people out there who do have that, and it's terrible that we live in a society that still happens, but it does. And then do you have to worry about like living in a nice sort of house? And then do you have to worry about like being able to take a good holiday? It's sort of like, which is a luxury. Yeah. So obviously we're past the points where we have to worry about that sort of stuff. But by the same token, like we don't have high expectations. Again, we don't take private yachts. We don't take private jets. We don't take like all that kind of stuff that like you think really rich people do. We don't do. And I use points for all my flights. Like we don't pay for flights. So I'm lucky enough to have points because we obviously own the business and can do point stuff. And
you have a few points.
And then we obviously work in the travel business. So we can not. I often have to pay, but we get staff discounts, that kind of stuff. So we're lucky to be in this industry, but we are incredibly grateful and lucky to be in the position we're in. That like Guy Raz asked the question is how much is hard work versus luck to founders, and in my view, it's like 98% luck. Yeah, like I'm not saying hard work is unimportant, but you got to be born in the right place. You got to be like, I was a white guy.
Well, how lucky are we? Like, what's the percentage of just being born in Australia? Like,
in Australia, but there's people in Australia who struggle as well. But yeah, in Australia, upper middle class, went to private school, white dude, like every sort of intrinsic piece of luck I had. I got to work at a great firm, got to meet great people, met Jez who pushed me to do this stuff, like all these sort of pieces of luck. So sort of gate one is 95% right place, right time, which we clearly were. And we weren't too rich or anything that like you don't have that fire. So it was like just the right amount of luck. And then, you got to work sort of hard for a period, but then you got to be right place, right time, as in like, had we started the business 10 years earlier, 10 years later, we wouldn't have been had any success. So there's sort of, if you look at, I think in Malcolm Gladwell's book, Outliers, the rich, like 6 of the 10 richest people were all born in around 1830. Why? Because the sort of industrial revolution happened when they were like 35. They were in the perfect position to make the most of it. Steve Jobs, Bill Gates, and the Sun Microsystems guys all born in 1958, I think it was, or 59. That's not a coincidence. They all came of age when they were in 1970, well, they were like 14, 15 in 73, 74, when the Altair personal computer came out. Perfect timing. Without that timing, they wouldn't have. That's like, so we came of age in the e-commerce era. We happened to have a sort of niche for e-commerce, selling travel online. And if we were too early, we would have missed it. Like e-commerce didn't exist. If we were too late, other people would have done it. So we had luck initially, all that other stuff. Then we had a bit of hard work, and then we had luck again that we had this wave of good timing.
And I feel like there's an element now where like my parents were born overseas in Greece, and we didn't go on holidays. That wasn't a thing.
Yeah.
And I feel like now you go on holidays every single year. Yeah. So I think that
absolutely
helps.
Absolutely. And it's been democratized for sure. Yeah. We would go in a car, drive to Sydney or Adelaide, and that's not luxury escapes doing that sort of stuff. We're not having any part of that transaction. So now people will go
I did Lakes Entrance. That was
exactly. It was too fancy for us. Like, now people go to Bali and stay at the Grand Hyatt and get 2 rooms and have all inclusive, and it's actually not that it's not dirt cheap. But I'm not going to sort of cheapen it. I'm not going to sort of make light of it, because a lot of people can't afford it, like a $4,000 for 10 grand when you include a flight trip, but it's not $100,000, or it's not unobtainable for a lot of people. So we're able to, and ultimately a lot of our customers are a bit older, a bit wealthier. So it's a different demo, but we sell $100 a night stuff as well. We don't just sell the 5-star super luxury stuff. So if we can give a great deal to a 4-star place in Bali, which could be $150 a night, we'll certainly do it as well. So yeah, you're right. Lucky that timing, the people now take a lot more trips than they used to, and we benefit from an older, wealthier population. That wave of baby boomers and now Gen X retiring, that's our sweet spot. Yeah. Okay. So there's just multiple waves of luck we've had that we're super grateful that we're sort of right place, right time. We don't take it for granted. We know we have to keep working super hard. Like, it's not just luck, but without that luck, it doesn't matter how hard you work. There's people who work a lot harder than us, doing 2 cleaning jobs and working 18 hours a day, or single parents who've had to work while looking after kids. That's much harder than what we do. So we're sort of cognizant that we work, but we've also had an amazing amount of luck.
Yeah, I love that. I mean, one final parting question, like, has there been one piece of advice that someone has given you that's had a...
I made my own piece of advice. There's a couple of things. There's 3 things that I always sort of talk about. The first one, and this comes from our experiences, right? So the first one is don't force an idea. So I think our very first, go back to the beginning, we had that apartments business. We saw that idea because we had a friend who had a problem, and we solved that problem. We didn't go home, quit our jobs, start writing notes in a notepad saying, what idea can we do? I don't think that ever works. I think you got to find a problem that you're in a great, be it unique or be it great position to solve. And that might be, you talked about how you set up you run great events. You're a great position. You must obviously know people. You're able to do it. If you're in a great position to create a business, then do it. But like, solve a problem that you understand. You can add real value.
Well, that was the thing. We came back from overseas and we're like, there's like no Greek things here, and we have the second biggest population of Greeks.
What happens.
So we want to go, and we know everybody else does. So let's make one.
Also, there's I used to work in a nightclub 20 years ago, and there just isn't nightclubs now because Tinder's really killed them, or Tinder and everything else. So there clearly was a great demand there, and you were able to solve that problem with what sounds like a great business. So you obviously have to execute it well, but
don't force an idea. You know what I mean?
I'm sure you didn't go home thinking, oh, what business can I create tomorrow?
Yeah,
you
exactly.
You came back, why isn't there a nightclub? I'm going to do a nightclub.
Yeah,
so that's exactly what you should do. And this is actually contradicts your one a bit, because you've got a couple of great businesses, but my general thinking is don't do it as a side hustle. So we start as a side hustle, but as soon as we could, we put full skin in the game. And the beauty of having full skin in the game is you have real opportunity cost and you go harder, and there's much more chance of actually
Do you think it's because there's more on the line?
On the line. Yeah. And I can say, like, you obviously got a great business here, but you could have a $100 million nightclub empire potentially if that was your core business. It's hard.
Yeah, no, it makes sense. I think about that all the time. Yeah.
So
go all in.
You've got to choose the right business. And this is probably your bigger cash cow. Exactly. So you chose the right one. But like for us, like we could have stayed working as professionals. We could have kept the apartments thing as a side business, and we would have got to 5 or 10 apartments, and that was it. But because we made it ours, we got to 50 really. And Jez pushed it super hard to his credit. We cash flowed it and started with 70 grand and got to 2 million turnover in like 3 years. And the final rule is something we learned sort of during the business, which is if it's not working with a team member, then don't keep flogging a dead horse. They're probably having a terrible time as well. They're probably hating it. The best is to end it as quickly as possible. And sometimes you can't. So sometimes like there's no one else can take that role, and you're going to train someone's going to take 6 months. Or that person's in like a really terrible position personally, and you just need to give them a tiny bit more time. But like as soon as you can, you're better off ending it.
Because most of the time, deep down, you know.
For sure. And every time I've ended it, even for like good stuff, sometimes the business outgrows staff as well. So that could be a great team member and the business has outgrown them. But I don't think we've ever regretted saying goodbye to somebody, even they've been incredible. Like most of the time they're not, and that decision's pretty obvious. But some have had really great people, and people have left us to get great roles. So you may have heard of Fun Day Lollies. Dan used to work for me. He's created a $100 million potential business there. We were sad to lose him. So there's different instances. And people leave all the time for different reasons. But I'm talking about when we initiate it more. And you basically never regret it. And generally that person will find a great job. They've had great experience. It doesn't help. There's a reason why you do it. And usually you find out things are a bit worse after they leave than you realize. There's always sort of worms under the rock. But there becomes a time, there'll be a time for me, no question. Hopefully it's not tomorrow, but there'll be a time where I can't contribute as much to this business as somebody else can in this role. And that's the time for me to go. So it's different when you're a founder a little bit, but there definitely will be a time. And I'm really cognizant, and you always got to keep your eyes open for that time. But there's never a great way to do it, but there's a humane way to do it. And ultimately, it's like getting a bad relationship. Personally, you're always better off having ripped the band off, cop the hit, and you'll be much better for it in the long run. So they're the 3 things that we should think about. And I don't like, certainly the third rule, I'm too slow generally. Like you're friends with people, or you have emotional connection with people. You don't want to do it, but ultimately actually it's not good for them either.
Yeah. And that's where I think, like a lot of people will start off a business and hire friends, and it's a tough one. It's a tough one.
There's pros and cons to that. If you look at the pro is you can know them, you trust them. It's less risky. And when you're early stage, when you've got 620 staff like we do, like if you make a staff mistake, it actually generally doesn't matter much. Like it almost never matters. If you've got 3 staff, it really matters and kill the business. So we hired some mate, not like best mates. We've had a lot of our mates work for us over the journey. Sometimes like they came back from overseas and needed a role or between jobs, and we just sort of helped them out. Or sometimes like Mitch, who became a shareholder, was our first really great salesperson. He was a mate from uni who was transformational for the business. So it can work really well, and it can be risky. But I'm definitely not anti ever hiring friends. But obviously you got to be cognizant that if you're pulling them out of a great role, it's obviously risky. If they're not working, then there's a big deal.
I think it's just separating them. Do you know what I mean? And when it's a smaller business, like you've got to be really careful to say, hey, like these are still the expectations, your KPIs.
Yeah, I think absolutely. You got to. And when I work with Mitch, obviously we're friends, but I'd sort of treat him like I treat any direct report. He was a bit different because he became a shareholder and everything, but I'd be harder on him than pretty much every report because I knew what he was capable of and capable of being really good. So, even now, like people who we hire, especially ELT, people who sit around, I consider them friends. Like and Scott Gower has this great point that the best way to keep retention high at a business is make sure everybody has at least one friend in the business. And we want people to be friends. Part of the reason why we do the lunches is to cross-pollinate people amongst the business. And lunch was half an hour ago, but there would have been a queue 50, 60, 100 people long at both our offices, and the people were sitting together and sitting with different people. We stole it from the Google Facebook playbook. We didn't make it up, but it's fantastic for building those friendships. And we're lucky that we work in a business that sells happiness and it's pretty fun. So it makes it a bit easier. But yeah, we want to try and, again, you hire for that culture, you hire for a similar culture, you'll hopefully get people who want to be friends as well.
Yeah. Amazing. Well, I really appreciate you coming on today. Heaps to unpack and dissect. And like I said before we jumped on, a lot of this is for me. Like I get to sit there and re-listen and have the opportunity to learn from successful people. So thank you so much for coming on.
Likewise, congratulations on your business and go from strength to strength. So it's a pleasure to be on.
Cheers. Thank you.
Thanks, mate.
Thanks for listening to The Leap. If you enjoyed this episode, give us a follow, or even better, share it with someone who you think will get value out of it. Big thanks to our main sponsor, Ethos 360 Recruitment, who's actually just us sponsoring ourselves.
This podcast has been produced by The Content Engine.
Selling shit we buying it.